Okay. We are alive, but not visually yet. We are. All right, let's do it. Good afternoon, everybody. Welcome to the Network Effect on Hxro Labs. I want to say Hxro Labs Radio, but it's actually our YouTube channel. If you guys are here in the audience, give us a what's up. We've got a new show today to share with you all, featuring mostly it's really crypto options and derivatives, DeFi through the lens of Hxro and Hxro Network specifically. So we're going to we're going to be talking markets. We're going to give our takes on what's going on this week in the market. We've got the Wednesday Fed coming up. Suddenly we're all macro guys. We got to watch that stuff. It's boring. The Euro USD hitting parity, which is, I don't know. What do you guys, what's your take on that? We've got Gunny, we got Rob Levy, founders of Hxro. Yeah. I've got like a couple €100 in my drawer. I mean, that's my exposure. What's everyone freaking out about? It's a big deal.
I think it's a big deal because these are like two of the biggest, most heavily traded currencies on Earth. And we're seeing real volatility. I mean, like real volatility. The euro has lost significant amount of value to the dollar in the last year. It's lost over 20%. I mean, that's a big move for the euro. I mean, how many 100 million people are in Europe with that currency? But it's a big psychological level. And I remember, when they just started the European Union and the currency and the ECB, all of that, right around the year 2000, I was studying abroad. And at that time, the euro would buy like 80 cents. It was the other way. It was like the only couple years in history. And then literally from like the year 2000 to the year 2008, the euro doubled in dollar terms and went to be worth $1.60. And that
right
was,
here, yeah.
Yeah, which was a huge swing. And so listen, the bottom line is that monetary policy in these areas is way different. And that it's all connected, right? I mean, if interest rates here, short-term interest rates are 3% and they're 0.5% or 1% in Europe, there's a big trade there. But, if you think that these central banks are not going to default and they'll do whatever they have to do to avoid it, then you've got some real trade there. But the wild card is the currency pair, right? I mean, do you want to lend money and get 3%, or do you want to get 1%? And that's pretty clear. I'll take the US in 3%, please. But yeah, it also means that the US currency is probably going to rally because people are going to put that trade on, and there's different pieces of the puzzle there. And quite frankly, who is it? Lagarde. I really don't like her because she's so virulently anti-crypto, and she's kind of, I don't know, a bit shady herself. But they're not moving. They're not raising rates like we are. So that's why the euro's just gotten absolutely smoked and the dollar's rallying.
Okay.
I mean, look at that. What do you think?
I mean, technically speaking, it's, huge 20-year breakout. I don't trade Forex, but it's coming into buy levels. But I don't, it's not driven by the same market forces that I'm used to. So I'm just not going to touch it. I know when I travel to Europe, I have to trade up to get some euros to play. And now we can kind of trade sideways. I imagine if I was getting paid in euros at the, the rates of cost of living over there, the euro is not going to go as far now. I imagine it's going to be a really big squeeze on a lot of people. That's my 5-year-old take, but
Does the euro stay intact? Do we start seeing like new kind of BRICS pop up, new coalitions between countries that are not necessarily connected geographically? Like, there's so many questions.
I know.
We're in such a tail.
Yeah. No, it's weird. I mean,
right now that, yeah.
And one of the big stories too is like the price of electricity and gas in Germany. You know, the whole geopolitical, the Russia thing is people. There's so much like, we call it FUD. There is so much like negative stuff getting like just circulated about Germany's gas prices and Europe going to freeze this winter and Russia's doing the. I mean, you never know. It's during those times that maybe people do say to hell with this euro, and I don't know if it's gonna get that crazy, but there's real volatility in these currency markets, and it's about as volatile as it gets right now. Like,
yeah, that's a sharp move. I mean, this is a weekly, so we're looking at 20 years, and this drop has been nothing short of gut wrenching, I'm sure, for anyone super long the euros. Look, I don't know about you guys. I did not have USDC pegged as the number one trade of the year, just being long USDC. But as it turns out, even euro holders are looking up at USD, USDC, USDT. Look, it depegged once to 95 cents, but otherwise it's holding its peg, and they've been redeeming billions and billions, more than my bank could ever redeem. So,
yeah, that's a great example. Like I've seen on Twitter some guys who are in Europe who are like, I'm holding savings in USDT or USDC, and I haven't been affected by the euro getting smoked. And I do think that, that's kind of what the euro dollar contract at the CME was all about out of the gate, was dollars. It was like this offshore dollar market, but like, USDC, USDT has served the same purpose, and it really opened up access for a lot of people not in the U.S. to keep their savings or their value in dollar terms, which I think at this point really helpful for a lot of people. I mean, Japan, dude, the yen is getting absolutely obliterated. I mean, the dollar has rallied 35% against the Japanese yen in the last literally couple months.
Yeah.
RT, I don't think you're sharing your screen.
Oh, I switched back. I switched. Yeah, but that's another deep.
Holy cow! There's real issues going on, and if we look at Bitcoin and say why isn't it performing now? There's a lot of other external factors here, but I think it's patience. We wait for it because everything we're seeing that's happening, I think is conducive for the growth of this non-sovereign currency. So I think that's kind of
good. Well, look, that brings us into really the meat of the show here, guys. For those of you who are just tuning in today, we got all 36 of you, and appreciate you. 9 of you already like us, and that's always appreciated. So if you haven't already, you can like and share the vid, get people in here. We're here to talk about Hxro Network. Really, though, options and derivatives and DeFi as a whole throughout crypto, and that's really the network effect. Fully composable primitive built on Solana. This is what is going on right now over at Hxro Network. So today we're going to talk a little bit about that. We're going to get into some roadmap items, some DevNet stuff, what's coming up this summer, and we're going to have guests. I think today being our pilot episode, we're really working through the flow of the show so that when we get a guest in here, everything's running smoothly. So with that, my big question, and this is for you, Gunny, is about on-chain versus centralized, CEFI versus DeFi. Obviously, this year we have a lot to talk about with regards to the shortcomings of CEFI and what's been happening with Contagion through Celsius and through Euros. But you guys set out to build options, derivatives for crypto, futures, all that. You moved on-chain. You talk a little bit about that. Why is that such an important development in your experience through options, market making, and trading?
Yeah, sure. Well, first of all, I think one thing to point out is that Hxro historically has been really associated with exotic options. And as we've moved into building this on-chain primitive, we've really focused there's been a lot of the kind of public discussion has been around options, but really this is a primitive for derivatives, all types of derivatives contracts. So it's not just options, it's perps, futures, eventually vanilla, like European cash settled vanilla options, which are kind of the standardized options that you trade, and then exotic options. And all of that is built around dexterity, which is this series of smart contracts that allow you to build any type of derivative contract. So, back to the question of why did we build this? Obviously, been in the derivative space for pretty close to 30 years now, Rob. 25, I think 25 years maybe at this point.
You're aging me a little, but
20. Yeah. Saw some really cool things being built across the DeFi landscape, largely around options, and then some, and obviously with some various kinds of takes on perps. But there was really nothing that we felt was attacking some of the friction points, at least that we've experienced, trading derivatives in traditional markets, and then being somebody that has come also heavily from the operational side, understanding a lot of the friction points that exist there, and answering the question, can we build something that is more inclusive, that is really open access, offers something globally, kind of normal, opening access up for the many, and being able to offer a base layer that you could have a trading experience along with the benefits of DeFi, like networks and the networking and the rewards, and kind of the leveraging of that network that really can grow liquidity and create a market that could really live within the fabric of the existing derivatives landscape as a whole.
Yeah, and there's a term that I've heard you use a few times: disintermediation of systemic risk.
Yep.
What the heck does that mean? I mean, what are you
systemic
talking
risk
about?
is, most people, whether or not you know it, is it's kind of like contagion risk. So you have an event, you have a market event that kind of cascades negatively through the entirety of the marketplace and throws off.
Whatever are you talking about? I have no idea.
None of us.
What's going on?
What's amazing
I'm
is
actually a contagion expert now.
Yeah, pretty much everybody is. They were. I think they're a Webb telescope expert now, and last week they were a contagion expert. So, no, what's so ironic is that the very reasons that so much of this peer-to-peer technology, blockchain technology, was created, came out of the systemic issues that were created around 2007, 2008, and we've almost come full circle. It's kind of crazy that a couple of players in the space were able to kind of take advantage of some of the early infrastructure, mostly in CEFI for that matter, and kind of lack of infrastructure and lack of due diligence that allowed them to cause a what has become a systemic event. And so it all ties back in my mind to having no central point of failure, or reaching a state of having no central point of failure where you can have one or a few number of parties who can make decisions that maybe ultimately just benefit them and not the rest of the ecosystem, or do things that put the ecosystem at systemic risk. And so one of the
it's
goals
really the
is
human error piece that just keeps coming back, and it's going to keep coming back.
It comes down to human error. And if you think about how, there was an event prior to, I think it was 2021, there's a hedge fund called Hxro that did something similar in traditional markets, who has very heavy infrastructure and due diligence, ways of performing due diligence, and they still got around it, and were able to borrow from multiple banks, and were on the wrong side of trades, and basically put, I think, Credit Suisse almost under. And so I think that what that goes back to is humans can make these decisions not based on verified, trustless fact, but base it on
Clout?
a relationship
Yeah.
and clout. And God, everybody loves Three Arrows. Like, Three Arrows is huge. Suzu is, I think he says is it's almost like has reached somewhat demigod status in many ways, and and kind of like in a cultish way, and
clearly an unhealthy way, as it turns out.
Very unhealthy.
I mean, imagine an uncollateralized loan of $500 million for your buddy. Like,
how about an uncollateralized loan of $500 million plus turning auto liquidate off?
Well, how about that? But what do you think the other 8 guys that he was borrowing 9 figures from would think if they knew that he had all that outstanding that all over the place? That's that lack of transparency that, human error is one thing, but the fact that it was completely in the dark and people didn't know what was open on different platforms, it just never would have flied.
100%. And you don't need to know who it is. Like, there's this concept that we've leaned pretty heavily into, more along the kind of the regulatory side of things, of know your transaction. Like, you don't need to know who it is, but the market should know that there's those risks are out there. There's a concentration of accounts that are building up a significant amount of credit risk.
Yep.
And having that on chain, like, it doesn't lie. And then being able to build systems that can mitigate it.
Even if you could dumb it down to like a health factor, I know our friends over at Abra, I say my friends over at Abra, they have the health factor. You have a loan out, it shows you the health of it. And I imagine with Hxro Network, you'd have like the health of the network, and you have an insurance fund. And we talked a little bit about before the show, we're going to get into this later, about the idea of growing that insurance fund and really having capital limits early on until everything's really sussed out and running smoothly.
You got it.
But that transparency piece, if not now more than ever, is I think it's fair to say, I think everyone can understand why you guys went this route.
You have to know it. You have to
more
know where your hard-earned money is sitting and what risks it is confronting, and its risk relative to the ROI that you are making for keeping it there.
Now, speaking of ROI, I want to ask you about the staking. For those of us, anyone on Twitter who's following us at Real Hxro Labs, you would have no doubt caught wind of the Blockmates article that went out last week. Talks a little bit about staking. So if you haven't checked that out on our Twitter, but maybe Rob, you could break down a bit, talk to us about the vision for staking and incentives on the network. You need participation, right? It's DeFi. It's not going to be like you guys putting up all these insurance funds collaterals. You need participation. What drove you to really design it the way that you did?
Yeah, I think, the main thing for us, it's almost like where we came from, use the things that work the best and then evolve and kind of change the things that aren't working great. And early on in our careers, we traded at some of the biggest derivatives exchanges in the world here in Chicago. And it was this idea of like a member-owned exchange, right? Where the liquidity providers and key players owned seats on the exchange. So that model, worked. And what we're doing with that model is for token holders who stake tokens, they share in the fees that are collected on the exchange protocols. And to start, the stakers are collecting 50% of all the fees that are collected. So, being a participant in this network, right, and staking your tokens, you are you're able to collect in the value that accrues in the network, sorry, Rob. Yeah, and not just it's not just on one platform. It's I think the listeners or people watching this should understand the concept of like B to C, like business to consumer. And so think of what Hxro
network is really a primitive layer, or like in the traditional, to compare it to the traditional world, the clearing layer. So when you look at
The
like
plumbing.
the plumbing, like the Chicago
Yeah.
Mercantile Exchange, there's something called, it's actually broken down into a couple different pieces. There's at the bottom is something called CME clearing, and then above it is something called Globex, and Globex is the exchange matching engine, and then below it is CME clearing, which is really the settlement, finality, margin, and risk layer. And so what we've built is something that encompasses the base margin, risk, settlement, clearing layer, and on top of that, the exchange. And so the exchange effectively is a plug-in version of something called AOB from Serum. Pith as a data oracle for settlement purposes, and then that underlayer is the combination of Dexterity and then Spandex, which is our customized inline real-time risk engine. And so you put all that together, you have something that is comparable, but it's open, and it over time will be governed by its users and its participants, and by its stakeholder, its token, the token holders. And that creates this ability where through composability now you're sharing at that bottom layer, because all volume, because it is B2B to C, you'll end up with having both CEFI and DeFi applications built at that second B layer. They're at the application layer.
Yeah.
They're composing with Hxro. They're sharing in all of the liquidity coming in from each app is all bottoming out into Hxro markets. So whatever app you're on, you're seeing that Hxro liquidity.
Now you've hinted now at the idea of multiple apps.
Yeah, and so and just on that point,
Yeah.
is as a participant in the network, you're sharing in the transactions from all of those apps. So you get true network effect out of it, and you really get to capture transactions at the base layer.
Yeah, the fees really that are running through it. Now, I got to ask, because I actually I work with you guys, but I don't know what is being built right now. You've hinted a few times that there's a few things being built. I don't know if you can get into the exact names, company names, but what types of apps? We're talking, you see your options, derivatives. There's a lot going on with derivatives. So, Perps being the one I know, but what else is being built?
Yeah, so to start, there's a couple of there's a couple third-party engineers that are building some base UIs, even for just this alpha sandbox right now, that'll be out in about a week. And so these are just basic like reference UIs that have those initial Hxro markets on it. So think of it as like when Serum launched, and there's kind of like this base reference UI that Serum has. Mm-hmm. That if you at the beginning when Serum first launched, you can go to like Serum or to one of a few different sites, and it kind of looked like the same UI. Effectively, it was just a forked open source UI, and so you'll see that initially, and then there's everything from there's a couple of existing DeFi apps that are DOVs, or option vaults, that are coming in early, and even moving to expanding product into like things like Basis and whatnot, that you'll be able to participate in Hxro derivative markets even before options are launched. And then a couple of like OTC, more OTC related apps where it's a little bit more like peer-to-peer trade matching, which are some really cool concepts that are coming. I think they're actually you're gonna end up seeing those first. And then you have market makers coming in as well, and then some automated trading systems that are being built to it to help create, kind of bootstrap the initial liquidity. But those are really the basics that you're going to see first. And where do we want it to go? Like we want to look out 12 to 18 months now, have somewhere between 50 and 75 apps on it that are all doing some amount of volume. They're pointed at different target users for different purposes, and again, at the bottom layer, all those derivatives that are being traded on those, like if it's a BTC perp, it's the same BTC perp across all those markets or across all those apps, and all.
So they're not, they're not fracturing liquidity. They're all going to funnel into the same pool, so you could get really deep. I got to ask, sports betting. Now, I did some UFC sports betting on the weekend. I actually went like 7 for 8, not too shabby for a guy who doesn't know UFC. Is there anything like that being built? Because I know, parimutuel, the idea that like anything with a dual outcome predictions markets, talk sports betting, can we see some of that on there? And is there anyone plugging into that already?
Yeah, so that, I think that's a little bit more focused to the early stages of, we have this, our parimutuel markets that we historically ran centralized and built up a parimutuel protocol on chain to facilitate that within Hxro Network as well. And we've had, interestingly enough, even though they're initially like BTC markets and these parimutuels, and eventually will be other cryptocurrency underliers, a lot of sports betting platforms and affiliates have become very interested in it as like a widget in their to use on their platform. So if you go to like a Betfair or something like that, and while you can bet on live in-game sports, you can also like play blackjack, you can also play roulette, and then you'll be able to do Bitcoin parimutuels. Not on Betfair, to be honest, but there are we have 3 other sports betting applications. I would call them maybe like at the lower end of first tier or kind of second tier ones, like smaller, more focused on specific geographic locations, who are piloting it for us, and then a couple of large affiliates that are like affiliate groups that have 50, 100 different websites that they're aggregating basically liquidity and volume at their layer. So really good, and again, it's the same concept, B2B2C, and just like in perps and futures and options, network stakeholders will be able to participate in that revenue from parimutuels as well.
Okay, well, I'm going to call the dev team this week and see if they can get me presidential elections in time, because I want to lay, I think that's going to be a hot bet. So we got to see, as a parimutuel dual outcome guy in the chat, so presidential elections, I agree. Now, Blade Runner in the chat has a question. He says, good to see you, Gunny. With concerns to governance, will the books be available for audit?
Yeah, of course. 100%. The whole goal here is to progressively decentralize this, and eventually hand it off to the community. One of the reasons that we started early, like if you think about some of the, like I know, we did that raise, brought in some of these bigger names from traditional finance who have crossed over into crypto, and some of the biggest existing crypto trading firms, is we really wanted firms that had domain expertise, specifically in network, and help us drive these decisions. All of us have gotten into this knowing full well that the goal over time is to progressively decentralize it and hand it off to community.
Okay. And for those of you looking up here, I've got a few things up here, some of the documents and that. If you want to find those, Rob, where can we go find those? For people who just want to do some of their own due diligence, it's the summer doldrums. It's a perfect time for it. Where can we direct them?
Docs.hxro.network.
Okay.
Yeah.
I'm actually going to copy that for you guys right now in the chat. So if you guys want to check this out, do some of your own reading. Highly recommend it. That's really like the best pastime for a bear market other than going out and playing golf, which I've been trying to do a bit more of. Next up, we want to talk a little bit about liquidity and spreads. We touched on this pre-show, the idea of like how dexterity is a really innovative solution to some of this stuff, and what those tighter spreads really mean for maybe the base user who's going to be staking on the network. Either one
Rob,
of you.
You want to go in there?
Yeah.
I'm going to answer a couple questions in the chat.
Yeah, sure. Spread markets in the derivative space, I think that for professionals and people who are used to making markets and providing liquidity, spreads are something that we trade every single day. And I would say that trading spreads, which is one derivative, one instrument against another, could be, if we're talking about like Bitcoin futures, right? It could be trading the September future against the December future. And, where you're buying one and selling another. And spreads do some really, really great things for markets and for liquidity and risk management. Buying a SEP and selling a DES future these are two very correlated assets. And when you're buying one and selling another, in an advanced margin and collateral system, it costs less to carry a spread, long one, short something else against it, than owning two outright instruments. And that's one special thing about Hxro Network and our risk engine, is that we are building portfolio risk-based margining. And capital efficiency is extremely important in derivatives markets. And we are very, very, very intimately familiar with, risk management from our experience. And we're proud of our risk engine that we call Spandex. So spread trading, it doesn't exist right now in any DeFi derivatives applications. We will be the first, and it's going to help with liquidity, because I don't want to get too technical here, but in most futures markets, the first future, the front month or the spot month, we call it, is typically the most active and the most liquid, the tightest markets, the most size. The market makers are really, very, very active in this first month of the spot month. And then for all the other months going farther and farther out, it gets less liquid. And the tool here to create liquidity across the curve are these future spreads. If you think about a spread between the front month and maybe a month, an instrument that's 12 months out, and you have a really tight, deep future spread, what that does is you can use that future spread along with the front month future and all the liquidity there, and you can, it brings more volume to that back month. And it does that across the whole curve. So in reality, when you have this truly liquid spot month or spot futures month, and you have really deep liquid spreads, it creates this really deep term structure. And that's, that is what we're doing here out of the gate. You're on mute, I think.
Thank you. I've still got that cough from last week, so I've been muting myself throughout. But we talked earlier about the idea of spreads, and I had kind of an aha moment. If you guys are listening to the show right now, and you've done some perps, you've done some futures maybe, but some of this stuff is still over your head, don't worry. Join the club. And part of this show really over the next few months and year is going to be expanding our knowledge base. But I had an aha moment today with regards to driving volume, because as a user, I am more on the user side of this thing, not an operator. I'm curious, where's the fees going to go? Because 50% of those fees are given out in the form of USDC to stakers. Now, if I put on a spread trade, I'm essentially putting on, it's one position, but I'm putting on two trades. So kind of double the volume. And that was my aha moment today. And perhaps
their calendar, or just, sorry, go ahead.
No. And it's just perhaps why we see such massive volume in equities like derivatives in the traditional market. So
you see it most heavily, like a great reference for, these are called calendar spreads or duration spreads. So, as Rob said, you have a front month contract, and you can see you have a perp, and then you have, or even like a 1 week future, and then you have, a monthly or a quarterly behind it. And now when somebody is making a market or providing liquidity in that back month for their dated future contract, they're potentially leaning on, or vice versa, they're making a market in the front and then leaning on the price in the back to hedge. by putting that spread on, they now effectively changed the risk profile from is this market going higher or lower to what is the relationship of A to B, and when it's two highly correlated assets like two futures contracts that are very close to each other, then you capture lots of margin efficiency when you do the type of margining that our risk engine does. And so that is such a it's how traditional markets work, and it's something that we're able to do here. And so when you have those multi-leg trades, which again, just as a side note, we keep talking about it for professionals and for market makers and whatnot. Through Hxro Labs, we are going to teach the retail world how to trade this stuff, because there are different ways to look at these markets where you can adjust how you risk your capital and how you use margin efficiently. And I don't want to promise outlandish returns and things like that, because there's always risk of downside. But there is it's a different way to trade, and it is more a professional way to trade, like trading an inventory that can allow you to sustain your trading in a different way. So but when you do execute, you are executing two legs. So you're going to get charged on both legs, just the way it works. But also if you're making on one and you are hedging with the other, so you're effectively like have a limit order in one market and you're hitting on the other market, then you're effectively going to pay zero, because the way maker taker works, you're going to have no fee for your limit order, and then you're going to pay the fee on your taker order, and net it's going to kind of wash out. So
well, I really like how you mentioned the education piece, because I mean, if anyone who's been watching our shows over the last year, they know I go on and on and on about play from strength and manage risk. And ironically, futures, perps, even though they're designed in many ways to mitigate risk, because they are misused 99% of the time probably, they are actually increasing the level of risk people take in the market and the liquidations. And one example I just had this past weekend is, Bitcoin came up to range highs. I had some spot positions that I didn't really want to sell and realize a tax gain on, but at those range highs, I can put on a perp short and essentially go delta neutral. And as we come back down, my Bitcoin went down in value, but I get to close out a nice perp short, all the while avoiding any taxable event on the long side for my spot positions. One small example, I can imagine with some more advanced puts and calls and all this stuff that I still need to learn right here with you guys. I could have done even a little more with that. So as we come to the end of the show, guys, this isn't meant to be, as long as DeltaFi. We're not going to stretch out the 2-hour shows. Staying concise, short and sweet on the show here every Tuesday. But I do want to talk a little bit about the roadmap. So a sort of a future facing, what can people look forward to? I know you mentioned the reference UI, I believe it's called. I want to get my hands dirty. Can I get into this testnet? How do I do that?
Yeah, we're targeting ideally next week, where we're in this sandbox alpha. This kind of it's on mainnet. It's not testnet, but we are using a valueless token that we call UXDC to replace USDC. And so the short run roadmap there is Alpha Sandbox. There are some market makers and a couple of apps that are connecting to it through one of a couple different APIs right now. And then we'll run that. We're still completing our migration of our staking and rewards contract is done and has been audited. The audit still needs to be written up, and obviously we'll release the audit when that happens. And we're going to integrate our staking and rewards contracts. And then next week we'll open up the alpha publicly, and we have a couple of reference UIs, as I mentioned earlier. There's a couple third-party engineers who are building a reference UI, which we will eventually open source as well. And it's pretty cool. It's got a kind of a different way of looking at the market, and we're very interested to see how the market's going to take to it. But something that is widely used in the professional world, and I'm really interested to see how it transcends into the retail world. And so we'll start there. Get constantly through our Discord channel, just try to get as much iteration and feedback as possible. And then when we're ready, which hopefully will be in the next, I don't want to put a hard timeline on it, just because with what we're doing, and we're trying to walk a careful line here, and is we want to definitely do things right and kind of security and risk first. We will open up to USDC collateral, but with capital blocks. So there'll be a limit on the amount anybody could deposit or withdraw to the network, and then start trading in a live environment. Staking will go live at that time. We are still doing the transfer from ERC20 to a native SPL Hero token. You'll need that SPL Hero token or ES Hero, the escrow Hero, to use to stake, or there's locked Hero for some of the people that have gotten in through the strategic round.
Yep.
And then we'll iterate on that, and as our insurance pools grow, we'll kind of be that between that and just general OPSEC and overall contract security. We will continue to expand the capital blocks, and then hopefully over not too long of a period, we'll be able to fully open things. And so it's kind of this like glide slope into being in full beta on mainnet, but it's moving, and it took us a long time, a lot of digging. There was a lot of learning, just being involved with Solana engineers, and to building this. And we did build it raw, not really built on top of anything. So
it's not a Uniswap fork.
It's not a quick and dirty Uniswap fork.
No.
It's not a quick and dirty just a different version of Serum. It's it's its own thing that sits alongside it. Think of it as a primitive in the same way that Serum is for spot markets. And so it's a big step.
I got a question for you. Somebody asked a good question. They said the risk engine framework being public, but the risk engine of yours is private. So not entirely open sourced. So kind of almost maintaining a sort of moat in a way. What went into that decision?
There's a couple things. First and foremost, like open sourcing your risk engine, the security there is crazy. Yeah, it's like you'd have to build something that was so bulletproofed, because it's your risk engine. It's how liquidations run. It's how things get margined. It's what makes the decisions of how coins move from one wallet to the next. So we felt that open sourcing dexterity, which is really the framework, was a big step. And actually, we're the only open sourced derivatives primitive on Solana right now. So which is pretty cool. And that risk engine is something that will be iterated on. We ideally, of course, want to open source it, but we think that the outputs of it, we feel that the network as a whole will benefit much more greater if we keep that private until we reach a point where it's so solidly locked down that nobody's getting to it.
We need some lindiness. Lindy effect, that's a word that just seems to come up. It's the 2022 year word of the year. I mean, as a holder, as somebody who has some Hero tokens, I'm super happy with you guys not sharing the secret sauce out of the gates and establishing the network and establishing the liquidity so that anyone with that code wouldn't really have much of a shot of just opening up their own shop, or some really smart, dark, shadowy coder coming in and exploiting it. Both bad things. So I, for one, think that's not a bad decision. This is the first I heard of it, but I think it's.
I mean, and it's just behind it, just so you're aware. Like, it's a combination. Myself, Rob, another member of our team who is an ex-Citadel, ex-DRW, financial engineer from University of Chicago, has a master's from MIT. Like, just incredibly brilliant guy who understands trading and risk, and then some of the teams from the prop trading firms that have been involved in the project since day one, and between them and then some engineers from Solana who got involved in the project as well, engineers from firms like Jump, CTC, Susquehanna. It's really backed by a group that has a very deep understanding of both derivatives, risk, trading, and DeFi. So very excited.
Okay, good. Now we are coming up to the top of the hour, I should say. This is more of a 45-minute slot we've got here. Rob, you recently wrote a blog here that outlined the path to 1 trillion. And you've called one of these AMMs, I think it's Spandex. Now, you were talking about that earlier. You're talking about Spandex. We've got these beautiful pink, green colors. So my question to you, Rob Levy, will you wear Hxro-themed Spandex if we hit 1 trillion? One day. Can I get you a custom-made Hxro Network Spandex outfit, and will you wear it on stream if and when we hit 1 trillion?
Oh my gosh, that is a great question. I'm a pretty modest and private guy, but yeah, 1 trillion in volume. Done.
I'm gonna hold you to it. I'm sticking around here, dude. So we didn't discuss that prior to the show, but it popped into my head. Spandex. It made me think of like Hitman Hart back in the day on WWE. Hot,
yeah,
pink and green. So I'm just gonna hold you that. I wanted to get that audio clip. You said yes.
Are those called singlets?
Yeah.
As long as it's not latex, because I'm allergic to latex.
Okay, allergic to that. We'll have our people do spandex with no cuts, no dirty latex in there. Hey, look, I just wanted to get that in there because you got me thinking about the Hart Foundation back in the day, my favorite wrestlers. So we're going to hold you to that.
Oh, they're Canadian, right?
Yeah, they are. They're Canadian boys. Poor Owen Hart, the blue blazer fell from the sky. I watched that live. It was crazy. This is what I daydream about, Caleb, apparently.
Gunny, were you a big WWF guy back in the day?
Oh, my God.
I mean, you had to be. That must have been right in your...
Just quick story. An early Hxro investor, he actually, his godfather is Hulk Hogan. And
really?
And when NFTs were first blowing up, they didn't know anybody in crypto, and they reached out to me, and I actually had the opportunity to spend about an hour, almost 2 hours on a Zoom with Hulk Hogan. Talking. I
think I talked to you that day. Yeah, you got off that, and you were like, "Hey, I was just chatting with Hulk." I was like, "What?" I remember that now. Now that you bring that up,
it fulfilled many childhood dreams. It's pretty crazy.
Amazing. The Hulkster.
Well, look, I would encourage anyone who is curious about what we've talked about today to get over to the Hxro Network docs area, the blogs. There's a lot of insight there. Bring your questions to the chat, guys. We're going to be live Tuesdays at 12 p.m. Eastern, same as today, basically every week for the rest of the summer, unless I need a week off. But it's summer, we'll see. But generally speaking, we're going to be live every week. We're going to have DeltaFi on Thursdays. Messi has confirmed his attendance for us on Thursday. I assume Dan and Rob will be there with myself, RT. Other than that, guys, I really appreciate you guys coming by today to watch our pilot episode of The Network Effect. Next week, we have not got a confirmed guest yet, but we've got a few feelers out, and generally the idea is to have a guest on every week. And if you guys have any ideas, thoughts, concerns, questions for segments that we can add into our slot, our 40-minute slot, please hit us up in the Discord. I just put the link in the chat a few minutes ago. Otherwise, like, subscribe, enjoy, and whatever you do from now until next time, always play from a position of strength.